Moon Gang, Earth to Moon Gang, Moon Station to Moon Gang. It appears through the Hubble telescope here that we have a bit of a situation. What we are seeing from the space, looking down at the market, it appears as if it's a bit of a bloodbath, and no one had their bath bubbles ready. So, getting a bit problematic. Lots of people feeling the pain today, and I am right there with you. This is painful. This is painful. But on my soul, have I thought about getting out of AMC and GME? All I've thought about it is how I'm absolutely not going to. It is very, very easy to be an ape and exclaim to the rest of the world, to the rest of the universe, that you are a diamond-handed ape fighting for market transparency and fairness and hoping for that MOAS. It's very easy to do that when it's green. It's super easy to do that when it's green. You find out how diamond your hands are on days such as this. AMC down 11%, GME down 6.7%. The market selling off, the Russell 2000 looking rough, the SPY looking rough, the Qs looking rough. Folks, this is part of the game. This is a very good learning lesson. Some of the best lessons you're going to learn in life come with a severe amount of pain. And in it, hey, if this isn't for you, that's fine. I'm not in any sense trying to belittle a person who's like, you know what, I'm seeing too much red. I can't, for my life situation, I can't be losing this money. That is fine. There is nothing wrong with it. We each have to take care of our own financial health. For me personally, all I can possibly do on these live streams is articulate what I'm going to do. And I've said this many times. My risk is zero. That's my risk for AMC. That's my risk for GME, is riding it down to zero. That is my risk tolerance. That is not appropriate for everyone. Maybe it's appropriate for some of you listening right now, but for me, I will be a martyr in this cause. I'm not simply going to sell because I'm down so many percentage points, so many thousands of dollars. This is painful. This is extremely painful. No one ever likes it when you are seeing red. And this is a good example of why we have that saying in the market: stairs up, elevator down. People typically take time to acquire shares. They buy slowly and surely. And yes, greed is a driving emotional factor. But when people panic, they sell all at once. So you have buy, a huge sale. And that's why we have stairs up, elevator down. Also on top of it, you have fear being a much greater emotional driver than greed. So that's exactly why. Stairs up, elevator down. And that is what we are witnessing right now. Now, please don't take away that this is an AMC, GME specific thing and all of a sudden start shouting random things like short ladder attacks and dark pools and that type. This is a full-on market sell-off. This is not in any way specific to AMC, GME. Look across the entire market. Look at the amount of red over here. Everything is in the red. Red. Everything's just selling. Everything's down. You're going to have these days in the market. That's the nature of the market. And like I said, this is one of those good times where you can really take a lesson of, this is why you have trading plans. Maybe not so specific to AMC and GME, but maybe you were playing the SPY, IWM, Qs, Tesla, Lucid, Rivian, all of those, Salesforce, I don't know, just name it. This is why you have a trading plan. You can't go into it and think that you're going to be 100% accurate and make money on every trade. You have to be in this for the marathon. You have to live to fight the very next day. That's all you should be focusing on. So if you're doing stuff, whether it's long-term investing, swing trading, options, day trading, whatever it is, stick to your plan. If all of a sudden you're feeling that emotions are driving you, that's not a good situation. That's not a good situation in the slightest, because the market does not care at all about your emotions. Calm, cool, collected. One of the best examples I can give of this is when Roaring Kitty, Keith Gill, was in front of the Senate committee or the congressional committee, or it wasn't even the SEC, it was a congressional committee. And even though this man who made a killing off of GameStop. He called it from the start. He's the guy who literally led us to this point. He's the guy who started all of this. You could just see how calm he was. He was being grilled by the U.S. Congress. Calm, cool, collected. That is the sign of a professional trader right there. That's the sign of a professional investor right there. That is the sign of a professional ape right there. At all moments, this is why you have a plan. Do not let your emotions of greed or fear get in the way. If for some reason you hit your risk on whatever you're in, okay, stick to your plan. But if your risk has not been hit, well, is it really worth whatever emotional turmoil you're going through? Because that's not your trading plan. You want to be as robotic as possible. It's kind of funny. In a certain sense, I think a lot of this ape community is emotionally driven. And for some cases, it's good. In other cases, it's bad. But it's kind of interesting because it's a very emotionally driven community when we're dealing with an apparatus of sorts that has no emotion to it. This is one of the coldest things in the entire world. It is the stock market. Take this, remember this pain, take the lessons from it. The only way this is a complete loss, not only financially, but beyond that, is if you don't take any lessons from it. Remember how you feel. If for some reason this is too emotionally unsettling, but you want to keep your position, that's cool. Click off of the stream, forget about the markets. Maybe instead of pretending to do your work as you listen to me, maybe actually do your work for the day. Maybe watch some Netflix, go for a walk, go for a jog, play with a kitten. I don't know. But you have to do what's best for you to handle the situation. Is the situation good? No, I'm not here to say, oh, but you got to think about it like this. This is bad. This is a bloodbath. I'm not here to say like, oh, but you got to think about it like this and this is actually a good thing. I'm not here to like sugarcoat a shit sandwich for you. I'm not. This is bad. This is painful. If hopefully you balance out your portfolio, maybe you bet against the market, maybe you bet against another individual stock to like help balance it out. There are tactics. And I think this is a very good reason of why we sit there and I attempt to teach you more about the market. I think days like this, when you're all in on an individual thing, this is a net negative because you could have been making money elsewhere if you had some free capital and then that you could use that to buy the dip. This is a beacon of why you kind of need free capital and you need to be learning about other aspects of the market. These people who fancy themselves to be purists and maxis and they don't even want to pretend there's anything else going on. This is the days that mantra fully falls apart. Because there's other people who are like, yeah, I'm in AMC, I'm in GME, I'm in equity, whatever, XYZ. But because they had free capital and they understood other functionings of the market, they were able to utilize the volatility of today to keep themselves afloat or even to make some profit and be able to buy this dip. So this entire rhetoric of like, nope, I'm all in, nothing else. Okay, well, those are the exact same group of people who are not able to buy this dip today because they were not prepared for the true reality of the market. These days are a very good learning day. No matter what happens to the market, up, down, boring as hell, there's some sort of lesson that can be taken away from it. And that's exactly what we are living in real time. This day, December 1st, to kick off the month, it'll be remembered as a day that we all learn more about our emotions, keeping our emotions under control because it's very emotionless. And emotions, whether you're elated, frustrated, upset, whatever it is, it's not going to change anything. It's one of those things where you got to get yourself off the mat and like come up with a clear, concise plan, something that you can stick to both financially and emotionally and get yourself out of it. Because right now, if you're in some sort of hole, you're the person who's going to get you out. It's not going to be some dumbass message that you read on Reddit, that you read on Twitter, that you hear on YouTube. You are the person who's going to get yourself out of whatever the debacle of your P&L is today. No one else but you. At a certain point, you have to step up and take responsibility for that. You're the one who's in control of your financial destiny. You have to accept that. And if all of a sudden you're pointing at other people, pointing at the Fed, pointing at our government overreacting to whatever's going on in the world, inflation, any of that, if it's the concerns over the virus, those are all external things that what they have all in common, is the fact that none of them care about your particular P&L. You are exclusively the person who's going to figure out what's going on for yourself. Do not look to anyone else. Look in the mirror, scream at yourself that you have potential, take that to heart, and get back to the grindstone. Be very serious about this career because this game is a very serious game. It's all sunshine and rainbows when everything's green and ripping and everyone's happy and everyone's doing what they need to. Do you know how easy it would have been for me to be like, you know what, guys, I'm sick. I'm not going to stream today. I have an interview tomorrow. And just to kind of cop out, that would have been so, that's the easy way out of streaming today. That is so, like, you think it's fun for me? I look at my account. I'm down tens of thousands of dollars today alone. It's not fun for me. I'm sitting there in this emotional bullshit turmoil with you. There's many times in life that you're going to have the easy path and then the hard path that actually gets you to where you're going. You can cop out. You can blame other people. I could have ditched it. I could have sit there and sulked in my own losses and bitched and moaned and been upset and blamed every other person. I could have avoided all of you. I could have hidden my face and been like, you know what? I'm sick. That's easy. That's the easy path out. But many times in life, if you avoid short-term conflict, it's going to lead to long-term conflict. But if you take short-term conflict on, like if you take the bull on by the horn, that's going to lead to long-term peace, long-term success. So remember this. Let's get up. Let's brush ourselves off. Let's be realistic about the situation. Let's be realistic about everything. And let's really buckle down and learn other aspects of the market. So days like today, you keep your head above water. And I know many people right now who are actually making money on today. They're not making money on AMC and GME, but they're doing enough in other aspects of the market to keep their heads above water and really being able to buy this dip with extra capital. That's very, very important. And my message to all of you, calm, cool, collected, learn the lesson from today. Take that forward. It's a very important lesson. And the longer it takes you to learn it, it's going to be more and more painful. Learn it ASAP. All right, what else do we have going on? It's a big shit sandwich and we're all going to take a bite. The AMC pattern from early Jan to mid-May overlays almost identically over mid-May to where we are now, almost exact. Wild. Isn't the dip an overreaction to the unicorn? Can't help but feel like this is an overreaction. I myself feel like it's an overreaction. We're repeating yesterday. If you're waking up and you're like, this feels like deja vu, look at, we opened up at 462 and we're closing at 455. The deja vu is literally from yesterday. Deja vu in the Qs yesterday. The Russell, even worse. It gapped up and this is an outside day. People are selling. People, they don't like the unknown aspects. People are panicking right now. But similar to yesterday when things were red, we did have a nice gap up. I mean, various things are going on that are outside of our control, but at the end of the day, you as an individual have to be thoroughly prepared for it. Who bought more today? Diamonds in chat if you did. Thank you for your transparency and honesty. We often hear the exact on channel, often hear that except on channels like yours. Can you give technicals on AMC and entry points? Yes. So on AMC, this is the support I'm watching, the low from, what is this, August 5th, $29. We're at $29.40. I'm hoping that this holds. We need demand. That's, people need to step up. Like the market in general needs to find demand at these prices. But similar to the same thesis of people panicking back in February and March of 2020, if things shut down, obviously the theater going experience shuts down, cruises shut down, airlines shut down. Maybe I'm being a bit optimistic and I don't think we're going to get there this time. It seems like everything I'm reading about the new flavor of Rona is that it's not as severe. Unfortunately, we do have an update on that for you. This just came out today. First confirmed case of the unicorn flavor detected in the U.S. In California and San Francisco, departments of public health have confirmed the recent case of Rona among an individual in California was caused by the unicorn flavor. The individual was a traveler who returned from South Africa on November 22nd. The individual who was fully vaccinated had mild symptoms that are improving, is self-quarantining, and has been since testing positive. All close contacts have been contacted and have tested negative. This was reported by the CDC. On top of that, we have some other things. So on one thing, you have the unicorn flavor. On this one, you have inflation. Harrison Steve Street CEO Christopher Merrill says inflation could last for the next decade. So this was coming out earlier today, and it's on the back of Fed speaking to the House today, the Senate yesterday, battling inflation. And in fact, so they're worried about it, and they actually might be speeding up their tapering. Instead of looking at June, they might be looking at March, potentially May, in there, basically just speeding up the tapering to help battle inflation, because it's, I would say, getting out of hand. And then of course they're continuing to gaslight us and be like, oh, like the transitory thing, I don't know why we're using that word. And then they're surprised at all of us for being mad. And then U.S. Congress aims to avoid government shutdown with a vote this week. So we have the unicorn flavor, we have inflation, and now once again we have the pissing match between the left and the right and the political gridlock that always prompts. So remember a couple months ago when they kicked the can down the road with the debt ceiling? Well, that can, we're coming up onto it right now. So they are looking to vote to extend it from early December to mid-January, late February. They are looking to get an extension. So this is one of those scenarios where we have three distinct things brewing in the background, none of which are good for the market. None of which. So it's not that surprising to me of why things are red today. And what it's causing is, okay, people started to see this come in. They're like, I should sell. And then enough people thought that it just caused other people who thought they were going to hold through it to panic. And now we see selling. Yes. I do believe a bottom will be found. I don't think this is one of these doomsday scenarios. I mean, literally just yesterday, if you look at the market, it went to roughly here and then it bounced right back up. I'm not here to fearmonger and play doomsday games. I'm here to say, hey, let's play levels of support and resistance. Let's be realistic. Let's play from tranche to tranche to tranche. Whenever we need to, pay attention to support and resistance, play the levels. Just sitting back with kind of like the deer in the headlights, like mantra methodology, it's never, ever beneficial in the stock market. Once again, and I've been saying it, but it's a very true saying for the market, you got to be calm, cool, collected. You got to know your plan. You got to stick to your plan. Overall, do I see why this is happening? Do I see what's happening in the market that's prompting this? Yeah, I mean, it adds up. When you have three distinct things, none of which the market likes, all coming to a confluence now, yeah, I get what's going on, and I'm not here to sugarcoat any of it. It's not a good situation, but I'm also here to point out historically when things like this happen, given enough time, everything recovers. It wasn't that long ago that we hit a new all-time high, which was about 40% higher than when we started in February in 2020 before that sell-off. So if you count from the sell-off point, it's probably a 50+% gain. So it's one of these things where if you look in the short time frame, that's when people are panicking. But when in doubt, zoom out. We've been through times like this before. Eventually, everything self-corrects. It just takes time. It just takes patience. Hey, Matt, just sold my ETH this morning and made some good money. May buy some AMC to make more money with the discount. It's not a bloodbath. It's a discount. Have you heard of Al from Boston? He's a fellow AMC fan. I haven't, but shout out to Al. I always like AMC fans. It's okay, Matt. Molly and I will still care about you regardless of what happens in this unfair and costly market. You're always welcome in our houses. Hey, shout out James and happy late birthday. Heard you turned the big 3-7. What's up with Vanguard leaving? I haven't heard about Vanguard leaving. I also don't know what it's leaving. Is this news or is it on Twitter? I'm looking up Vanguard. I'm not seeing a generic news posting. I'm not scared. I know the GME and AMC is capable of. Shorts haven't covered. Be fearful when others are greedy, and greedy when others are fearful. I get the sell-off, but why is AMC getting crushed so much more than the overall markets in Russell? IWM 12% and AMC 35% since November 8th. Generally, because indices are a composite of many things, it has less of a magnitude. So generally, an individual equity will go up more. So you could say the same thing when things are going up. Why is AMC up 2,000% on the year when the Russell's up, I don't know, 20 or 30%? Individual equities tend to have a higher volatility than an ETF because an ETF is a basket of multiple stocks. That's that sword cuts both ways. Individual stocks go up more than an individual equity, and they also go down more than an individual equity. Particularly with AMC and IWM, what you're seeing there is the fact that AMC is the largest holding within IWM. So right now, we've seen this before in February/March of 2020, when there were fears in like round one of the virus. The small cap sector got completely destroyed because we know that the government's going to bail out like big companies, not small cap. So when I say small cap, I don't want you to think small like mom and pop stores. We know the government doesn't care about them, but in reality, the government doesn't even really care about small cap, which is still multi-billion-dollar companies. They care about the big people. They care about the Dow 30. They care about the NASDAQ 100. I don't even know if they all honestly care about the entire S&P 500. So when businesses suffer, the ones that aren't too big to fail are the ones who are really going to get hit. Wasn't going to buy more at 34, but I'm definitely going to buy some now. When this jumps back, we'll be going to make some money. DZ Hustler. 8% down today, but it could average down on Prong. Shout out Adrian. Jared, keep holding my friends. Great time to buy. This is a lesson learned for sure, but it was payday, and now I'm buying the super dip. If I don't feel like it, it will be another lesson I will learn. David, shout out. Chad, shout out. How about those Tesla puts? How's Tesla looking today? Tesla probably making some money. Yesterday, someone got the 950s. That was an unusual whales alert, and that's for tomorrow. I wonder if they're green yet. Oh, wow. Things are getting crushed. Crushed. AMC coming in at 27, GME 177. The SPY is down at 453, IWM 214. Hey, Matt, finally got over 100 shares with the dip. Been buying since January. Right, 6 months. I just keep buying more. I love the discounts. Sell when it's red so you can buy when it's green. Hey, Match, I sold those 950 puts for a 30% gain. Would have made 130% if I held. I just want to let you know I hate myself. Next level of support is 13 AMC. My fam won't Xmas. I don't think that. I think there's going to be support before then. There's going to be support from volume profiles in the late May run up. But right here, where the support I'm watching is 28.90. Let's see if it kind of bounces and retracts, because this seems like an overextension and there has to be some sort of reversion coming in. Just lowered my overall cost on AMC shares by almost $10. Hell yeah. Do I think that if SPY keeps breaking, it will fill the gaps to the downside? Yeah, I'm kind of watching if it's at support right now, 454. If it can't hold that, yeah, 450 is important. But first gap fill, 447, then 442, then 436. These are three key gap fills that are like could realistically be filled. All right, people are asking for Ortex. I mean, I don't think this is a heavy short day. This is a panic day. AMC, they borrowed $3 million against it for a net of $2 million. Short interest up to 16.8%. GameStop, they borrowed a net of 8.6 thousand, 80,000 in total, and the short interest is 11.12%. How is CRM doing? Down to 254. That one's getting crushed as well. Yeah, I see people are talking about Vanguard, but I'm not seeing that news myself. I don't know what the data source is, so I don't know what to like search for that. Matt, jot this down. The squeeze starts Friday. Want to bet? Tommy from the Bronx. I very much hope it starts on Friday, and I'll write that down. Notice no halts on the way down. Shake my head. That's because the halts are, you have to move a certain percentage in a certain amount of time. It's like 10% within 5 minutes. We just haven't hit that. Halts are agnostic of going up or down. It's a percentage move in a certain amount of time, and it hasn't happened. This is more of like a slow bleed than anything. Someone said, who banned the diamond emojis? No one. So there are people are using the diamond emojis right above you. SRS tomorrow at least. So yes, AMC is officially on SRS short sale restriction. As soon as you drop 10% intraday, you are put on SRS. You're on it for the remainder of the day in the entirety of the next trading day. And yeah, they can stack up. If it drops an additional 10%, it just keeps rolling and rolling and rolling. If you look at SRS, it's referred to as the uptick rule, as in you can only take a short position if the stock is trending upward. It's attempting to stop the dog pile effect. I don't think it helps us that much. Previously, when we've been in this insanity in like February, people were like, well, yeah, but like at least we're on this, like that'll help us. I've never really seen SRS help us. So we are on it. Short SSR, short sale restriction. Yeah, not SRS, SSR, excuse me. So if you want to learn more about it, search SSR, short sale restriction, look up the uptick rule. It's kind of one of those things where I feel like they came up with a Band-Aid for like a gut shot. They're like, oh, that looks super bad. Like here's a Kohrs Band-Aid, your favorite cartoon. So we'll see how that's going to actually play out. But yes, AMC is currently on SSR, but it's weird because remember, market makers, if they deem so fit, they can actually still short. It's up to them. If they feel that the various venues are out of whack, they have the ability to still short even if SSR is on during a downtrend. So that's when you're going to see a spike in short exempts because market makers can still short during SSR. What is going on? I should have bought SPY puts news. Yeah, the variant, the new flavor of Rona has shown up in the US. It sounds like the Federal Reserve, to battle inflation, will be speeding up its bond tapering. And then on top of that, our government is fighting about a shutdown. So we have three things that normally the market wouldn't like at all. And now they're all together. Matty boy, hot tea and bourbon. I'm not shouting. What's going on, Jason? Is it smart to play the VIX on days like today? Yeah, I mean, there's various smart plays. If you think things are going down, you could get puts on the market. You could buy volatility. You could get calls on volatility. You could look at inverse ETFs. There's various ways to play it if you're confident that the direction is downward. You and Trey mentioned in the Seeking Alpha article. Yeah, I think that came out yesterday, and I went over it. Does this dip change your strategy? Not asking for financial advice. Love you, Matt. I don't know, like strategy on what. If you're thinking AMC and GME, absolutely not. I already told you my risk is 0. AMC is $28.42 away from minimum risk, and GME is $179.58 away from my risk. If anything, I think if I see buyers stepping in, I'll probably just add more, like increase my share count. To me, this is a huge overreaction, and we're waiting. Sold $50 calls for $12.31 earlier today, bought more shares. Thoughts? So you sold covered calls. Oh, so you're collecting that premium and then you use that credit to buy more shares. I think if you're feeling confident with options, that's a strategy. It's definitely above a novice strategy though. So like make sure you're confident in like what a covered call is and how it works. But you use it to increase your position. We could talk about some good stocks to get into in the event everything shuts down again. What do you think? So previously we saw a lot of like digital communication stocks do well. So Zoom did really well. At-home workout such as Peloton, that had done very well. Basically anything that people are going to utilize if they're in their own place is going to do well. With that, I mean, the first two that come to mind is Zoom and Peloton. I wouldn't be surprised if alcohol stocks do well. I could understand that people might want to be drinking a little bit more. So you could like look at Anheuser. That's a popular one. Let me think about other things. Don't forget, you can make money betting against certain things. Like if travel does stop, people are not going to be using airlines. They're not going to be using cruises. But I do want to reiterate to everyone that previously, if you look at February of 2020, the sell-off only lasted about a month. It wasn't like continually selling. And then I'm assuming that that's one is going to be quite a bit more extreme. This is important for us to all take note of. So when things were absolutely horrific, it went from February 20th to March 23rd. It lasted about a month. So don't think this is one of those things that you could just sell, continue to sell. This time period was way worse, and it lasted a month. So with this one, for me, if I liked what was going on beforehand, it obviously makes sense to buy it when things are on discount. As soon as I see a little bit of demand showing up, as soon as I see some people actually starting to buy, I'm going shopping. I'm going shopping on discount. I see no reason not to. To me, the severity of the current situation is far less severe than it was at the start of 2020. So I think it's going to be less of a percentage sell-off, and I think the time frame of hell will be even smaller. So if anything, I'm just going to be waiting. I'm going to wait. I'll probably send some extra cash to my account, some USD, and I'll wait. And then when I think the moment's right, I'll be attempting to buy the weakness, buy on discount. This is from Dave. Apes, keep your head up. We've been here while scared money dumps. We buy the dip. Shorts have not covered, so I stay put and enjoy the duck boy speak. Oh, hey, Matt. Shout out, Dave. And actually, not only have the shorts not covered, they've increased. The shorts are of a greater magnitude now. Overreaction equals easy shaking of retail tree prior to end of year, ripe for rebound into the holiday. FOMO will be insane. Yeah, you have some tax loss harvesting. You have people who are just getting out of their positions like at the end of the year. You see a lot of wonkiness, and I think the FOMO when things turn around will be pretty immense. Guess negative beta is trash. GME's volume has been averaging 1 million volume. Anytime we saw 2 million plus, we were green. Retail owns GME. Retail isn't selling. Yeah, the negative beta is a poor understanding of beta. So when you're using beta, that's assuming that the price movement is normally distributed. And from the data I've seen, AMC and GME are anything but normally distributed. I think beta is a poor data tool to use when speaking about AMC and GME, especially because what's the relation to the S&P 500? If anything, I would trust it more when it's being tracked to the Russell 2000. And as of now, GameStop's not in either of those, so I don't see why it matters. But, and I've said this, and I didn't even know people were thinking this way. It was like new to me within the past month. I didn't realize there were people in the community who thought we needed the market to sell off for AMC or GME to MOAS. I thought that was highly unlikely, and I hope today's, like today, show that we should not be hoping for a market crash. It drags individual equities with it. Bought more. I feel like this is like the initial Rona dip. Have you seen the Seeking article ripping you and Trey saying it's been downhill since you got on TV? Yeah, that came out yesterday. We already went over that. Whoa, just checked my stonks. I think it's time to hodl. Hey, Matt, I've been paying attention in the last few days. What's happening with the sudden drop in AMC and GME? No FUD, just curious. The market. This has nothing to do with AMC and GME specifically. The market is selling off. The SPY, the Russell, the Qs. This is a market-wide sell-off. This is not specific to AMC and GME. If you think this is particularly specific to AMC and GME, you need to open your eyes. I know that's a little bit of tough medicine for some people in here because you think everything resolves around AMC and GME. It does not. AMC and GME, in terms of the overall market, are a drop in the bucket. This is a huge market-wide. This is a multi-trillion-dollar sell-off. It's just many hundreds of billions of dollars at a minimum are selling off right now, disappearing into the ether. Not everything in the stock market revolves around AMC and GME. And this is one of those lessons that when the market goes kaput, it drags a lot of individual equities with it. What else do we have? All the Bermuda money. Bermuda money. What else do we have? I'm seeing if there's any discount. This sell-off could be good for the apes. So hello, this is Margin speaking. It depends on how the holder of the shorts have themselves positioned. Question, and this isn't FUD, but wouldn't hedgies be up in their short position as AMC drops, giving them more reason to not cover? They would be up depending obviously on their entry point, but to realize that profit, you have to buy back at some point. You can't indefinitely hold a short position. So just like the way when you're long and a stock's going up and up and up, you can't, like, to get that money, to realize that money, you eventually have to get out of your stock position. All right, what I do want to do, because I see a lot of people panicking, let's put on our education hats. Let's talk a little bit about what in the world is going on. Let's talk about the moving average convergence divergence, better known as the MACD. So this is a very common technical indicator, and it's on the bottom of the screen right now. So from the high level view, what you need to know about the MACD is it's a momentum oscillator. Similar to the RSI, it tracks momentum, it tracks trends, and it's an oscillator. It goes up, it goes down. So if you want to get into the nitty gritty of what this indicator, this technical tool is showing you and how it's calculated, you first need to know it involves two different numbers. The first number is the 12 exponential moving average, which is the white line. And the second one is the 26 exponential moving average. So we have a shorter time frame, the 12 EMA, and a longer time frame, the 26 EMA. So for those of you who don't know, exponential moving average, it's pretty similar to the simple moving average when you're taking the average of most likely the closing price of the previous X amount of bars. So for simple, they're all equally weighted. And with exponential, there is more emphasis on the most recent bars. The most recent bars are more significant. They have more weight in the equation. That's the difference between simple and exponential. So the simple, once again, is in the white, and the kind of purple pink one here is the 26 EMA. So the MACD, the moving average convergence, divergence, is the difference between the two. You take the 12 and you subtract the 26. So you would take the white line and you subtract it. So that's exactly why around here on October 18th, you take the white, you subtract the pink, that's 0 because they're at the same value. And that's exactly why on that day, this blue line, which is the difference between the two, was exactly at 0. You could see that the 0 is over here. So once again, you take the 12 EMA and you subtract the 26 EMA, and that's what gives you the MACD, and that's this blue line. Well, there's a whole nother line on the chart. What is this orange line? Well, that's actually the, like, when you add in a, like, kind of a smoothing factor. So what you're doing is this orange line, also referred to as the signal line, is the 9 exponential moving average of the MACD. So it's the 9 EMA of the blue line, also referred to as your signal line. So what you're looking for here is behind that, the third thing on the chart is a histogram of sorts, and that's the difference between these two lines. So let me, for now, to not confuse anyone, let me hide this. The histogram is the difference between the two lines. So basically the blue minus the orange. So as they get farther apart, obviously the bars get more and more. And then if the blue is below it, that's why you have red, because you're subtracting from a negative there. And then if they're equal, that's exactly why the bars are 0. So this histogram is just the difference, the magnitude between the orange and the blue. Obviously it's the orange taken away from the blue. So the final thing you want to know here is the crosses. And this is what people use for trading signals. So when it crosses, that's a signal. So right here, people would have used this as a signal, obviously, because the orange was crossing on top of the blue. So that's a bullish signal. And then more recently, you have the orange crossing under the blue, and that's kind of a bear signal. So you could look at it as like bullish as in buy, or you could look at it as bearish as in sell, as in if you were using this straight up, it would tell you to get in roughly in here, and then you would be selling a little bit later around here. That's one way you could use it. Like many of the technical indicators we discuss, I think it's more appropriate to pair it up with another indicator, such as the RSI. Yes, this is another technical oscillator. It's another momentum tracker, another trend tracker. This is a little bit different because obviously the MACD is the difference between two exponential moving averages, while the RSI is relating the relative gain over the previous X bars compared to the relative loss over the previous X bars. So a little bit different, but kind of the same, I guess, overall idea from the high level of what it's trying to track, but just some nuances there. So I think you could use this in various ways. So you could look at the signal for maybe like an entry or an exit. You could look for that cross. Sometimes other people, what they like to do, and I think this will be better illustrated on a Tesla chart. Let me just bring up the MACD here. Let me drop this. Is if we look at the 2-hour Tesla chart, you're gonna, let me make this a little bit bigger and let me make this a little bit smaller. So some of these times, right about here, you're going to see that you have overextensions on both the RSI and also in the MACD. So for example, what I'm talking about is the RSI was above 70. It's clearly in the overbought territory, very bullish momentum, potentially too bullish, potentially running out of steam. And on top of that, you had large bars, as in there was a big difference between the MACD and also the signal line. And people will use that as, okay, the trend has kind of run its course. So if you use that, well, the first time, yeah, it did come down, not too much. The second time that I have measured out here, if you use that, okay, clear overextension, the bar was pretty big difference. And 2 days later, there was a considerable sell-off. So sometimes this is another example of using multiple indicators together can be pretty solid. Another way you could use that is, let's mark out, let me delete these two just so there's no confusion of what's going on. Let me mark out right, oops, not that one. I don't want that one. I want it to be a bar over right about here and then also here. So a couple things to point out on this one. Once again, you had kind of these red bars. You could use the opposite, but what I'm really trying to illustrate, and let me drop the RSI, is similar to RSI when we see divergence, as in the price went higher, but the RSI went lower. That's bearish divergence, and vice versa. You can use that once again with MACD. So check this out. Tesla went from about 1,007 all the way down to 988. But look at these lines. See how the lines are actually higher? Once again, that is bullish divergence. Price went lower, but the lines, both the MACD line and the signal line, were actually higher even though the price went lower. Lower, but higher, that's bullish divergence. And look what happened right after that. We actually went, like, Tesla had a pretty nice rally from 981 all the way up to 1,200. So even if you were looking for that type of divergence and then you were looking for maybe a better entry, well, you could see that from an RSI perspective, it was actually also oversold. So there were two different signals that when used together were telling you that Tesla was a very strong buy right around 1,000 on November 15th. And you could have rode that all the way up to really whatever you wanted to. You could have rode it up to 1,100. You could have waited for the RSI to get oversold and look for this cross, maybe in this zone of 1,150. But regardless, that's, I guess, the strategy of an exit. I'm trying to show you how, yes, you can use this individually, but most of the time it's going to be better when you have various indicators. These are two oscillators. Maybe you want to use moving averages, exponential moving averages. Maybe you want to use time. Maybe you want to use seasonality. That's when it comes up to you and your methodology. But overall, let me drop these. MACD, the moving average convergence, divergence right here, is a very, very strong tool. From the highest level, it's mapping out momentum. It is the 12 exponential moving average minus the 26, and those differences create the blue line. And then if you apply the 9 exponential moving average to the MACD, that's where you get this signal line. People look for the crosses upward and downward, and that's common signals. I personally think it's best used when also in addition to other technical indicators. Once again, that's the MACD, MACD, the moving average convergence, divergence technical indicator. And apparently my teaching did not at all help with the market because things are still pretty red. Did Matt sell his AMC? No. Why am I answering that like so much more today? Haven't even come close to it. If anything, I was like, hey, where's my opportunity to buy? I feel like the people who are asking it themselves are like themselves nervous about their own position. I can very honestly tell you, I did not know. I still have it. Like I said, I'm thinking actually about buying more. But also beyond that, why does it matter at all? Like, that's the thing that confuses me. You shouldn't be in or out of a position because someone on social media is in or out of a position. That's the most like Looney Tune idea ever when it comes to the market. You shouldn't be buying and selling because someone else is buying and selling. That is a ludicrous idea. It's a stupid idea. It's an extremely dumb idea. You got to be in it because you're in it, because you know the DD, because you know what's going on, because at the end of the day, it's your P&L. Like I said, no, I'm in it. I'm in AMC. I'm in JME. Like I said, I'm thinking about buying more, but I still think it's silly that it even matters. It's silly that people even like care, because what does my position have to do with your position? Are you following any NFT projects? Yeah, I'm actually following the Gambling Apes project. I have 2 of those, and I'm finally back to, like, I bought it and like right away, just knowing my luck, they went down, and now I'm actually back to above break even. I'm in a little bit of a profit with it. The problem is that you aren't an ape. You're just a shill who wants to earn money with clicks. No, I think I've actually provided an immense amount of value. No one on this planet has put out more content in support of AMC or GME than myself. No one, literally no one has. I'm very proud of the value that I've brought this community. I'm very proud of the opportunity to teach, to entertain, to talk about the psychology of what's going on, to share my own stories, to do my own rants, to to refer to someone as me as a shill, I mean, I'm not telling anyone to buy or sell. Like, who am I shilling for? I think people who use shill don't even know what shill means. Like, who is it, I guess, benefiting? I think people say shill and they just like don't even get it. It's pure jealousy. I guarantee people who call shill would trade anything to be in the absolute awesome position I'm in. The things I get to do, the people I get to talk to, the stories I get to hear, it's all so heartwarming of what's going on, of people like being able to improve their knowledge of the market, improve their financial situation, gain knowledge of trading, their own psychology. It's such a privileged position that I found myself in. And these people, yeah, right, shill. Dude, you're the one who's watching me, and you're watching me. I have no clue who you are, and I probably won't know who you are. You seem to be like a very sad keyboard warrior. Someone said Fox just said that AMC is done, as in Liz Clayman. Isn't she speaking right now? I don't know if she would say that. We understand that we are buying at our own risk. Yeah, of course you are. So I kind of view it as, I view myself as like the springboard to help a lot of people where to get started. A way to think about certain things, and a way to at least find the tools of like, where should you even start? Because I think that was one of the toughest parts of my trading career, is like a lot of the time I'm like, what's step one? So I view myself as kind of doing that, of like, hey, check this out, look into this, do you understand this? I am not the end all be all. I have nice winning trades, but I also have horrendous losing trades. I am not some masterful, amazing mastermind trader. I'm not. Like I said, I still have considerable losing trades. Sometimes I still have issues with my own discipline. If you've seen any of my Tesla trades, you'll know that I'm still on my own trading journey. And that's why I've never, ever sat here and said, I am an expert trader. You have to listen to me. There are things that I get right. There are things that I get wrong. When I get things wrong, I feel horrendous. The very next stream after I realize what's going on, I say, hey, I got this wrong because of X, Y, and Z. Here's where I went wrong. And like, we try to get that resolved as quickly as possible. But if you even haven't heard that from me, I'm telling, I'm not an expert trader. I don't want people arbitrarily following me because I was like, oh, I'm looking at this gaming stock or this marinara stock or this gambling stock. I think you could use me as a starting point of like, okay, he thought about it like this, this, and this, but have some critical thought with it. Do you agree? Do you disagree? Trust me, I am not the person who's perfect and an expert on all of this stuff. I am not. I'm not even close to it. So I think it's best to think of it as like a starting board, maybe some interesting ideas, some interesting conversation. But beyond that, no, like that's insane to think that you should be following someone because you saw them say or do something on social media. Thanks for the tutorial. What version of TradingView do you have? Pro, Pro Plus, Premier? By the way, Luna plus 7% last hour. Crypto profits to buy the dip. I think I'm on Pro Plus. Whatever is the one that gave me this. But beyond being on Pro Plus, I also bought like the data package to get the like up to like the tick by tick data. You're the one who got me into the world of trading. I now have a true passion for it. Thanks to you. Thanks for everything you do. Here's 5. Shout out Griffin. Folks are forgetting game went to 50 before another run up. Oh, yeah. Yeah. Shout out Parshooter. I don't always agree with you. In fact, when I confronted you about supporting Weeble, I was outright dismissed and stopped watching. But Ape, no hurt Ape. Apes together strong. Thank you for your support. What's going on, Catfax? I don't quite remember that. I'm just saying I don't remember it. But I mean, for clear commentary on Weeble, that's a payment for order flow platform that is supportive of off-exchange trading. I think one of the biggest issues retail is currently facing is the extreme amount of off-exchange trading. We need more lit exchange trading. And in reality, we just need a good, reliable broker. I know a lot of people were recently directed to Fidelity. And then between last night and today, Fidelity has started to show its true colors. That's honestly one of the biggest, like right now, is like, who's a broker that we can trust? It's coming down to the fact that people are starting to realize you pay for what you get. And I think people are starting to realize these commission-based brokerages, you end up paying for honesty and transparency. Matt, you and trade change lives. You have nothing to apologize for. I speak for a lot of people when I say thank you, thank you, thank you. And I appreciate you, Dark Horse. I mean, I appreciate like all this support. Even oddly enough, these like hate views, like I appreciate that support. I really, really do. Because like we're in this together. It's one of those things. I wasn't born with a silver or golden spoon in my mouth. A super normal ass upbringing. Like just folks, if you're retail, if you're watching this right now, we might have severe disagreements in opinion of how things should be run, of how things should, I guess, be said and spoken and thought about and all of that. But at the end, truly, in the way the world is set up and the way America is set up and the way capitalism is set up, we are in the exact same trenches. You might absolutely abhor me. You might be sitting here with steam coming out of your ears thinking I am the lowest piece of scum on the planet. And whatever, if you think that way, okay, I'm probably not going to change your mind. But also understand that even with that thought, day in and day out, I'm still fighting for you. We are in the trenches. Our backs are together. We have the exact same enemy. I'm guaranteeing you, unless you are that Citadel intern, the one viewer who's a Citadel intern who's forced to watch me, everyone exclusive of that, we are in the same exact shitstorm together. We are sailing through the exact same hurricane, and we are on the exact same boat. We have the exact same enemy. We are trying to fix the exact same thing while hopefully making some money along the way. As a person, you might not like me, but I'm telling you, I have your back, and I very much actually believe you have my back. Like I said, we don't have to be buddies. After this, when we're all on the moon, we don't have to go to that same moon. Like we don't have to split a beer at the same moon bar. We really don't. And that's fine. That's perfectly fine. But at the end of the day, we're still on the same side. We're still in the same trenches. We're still fighting the same person and whatever. Maybe you're not going to invite me to your wedding and I'm not going to invite you to my birthday party at Chuck E. Cheese's, but that's cool. We'll get over it. I'll go buy my own wedding. You can go buy your own Chuck E. Cheese and we're going to go on with our lives. Perfectly acceptable. Can you explain why the sell-off happens and who's selling? Yeah, owners. Sell-off across the market. It's people just hitting the sell button. People who are most likely long. Yeah, there are some shorts creating a position, but this type of a sell-off is panic. It is people seeing their portfolios and they're hitting that ejecto-cedo button. Someone said screen black. How many tokens can I get? Yeah, this is pure panic. Pure panic. I am now looking at this gap fill on the SPY to 447.55. First gap fill, and there's actually still two below it, 442 and 436. Ding, ding, ding. The casino, aka the bloodbath, is over. Over. Folks, you could close the books, you can close the paragraph, you can close the chapter for today, Wednesday, December 1st. Not the best day to kick off the month. Let this forever be known as Red December. Well, hopefully it changes by the end, but this is pretty brutal. The S&P 500 lost 1.1%. Yesterday it lost 2%. The Qs lost 1.7%. Yesterday it lost 1.5%. Today IWM lost 2.3%. Yesterday lost 2%. AMC closed out at 28.65, which puts it down 15.8%. GME was at 179.84, which puts it down 8%. Prague is at 272, down 13%. Everything's in the red. Everything is in the red. I see Solana's in the green and Matic's in the green, and everything else I see is in the red. A little silver lining, Robinhood hit a new all-time low, but that is a very small silver lining given everything else that is going on right now. This is brutal. This is brutal. This is brutal. My message to all of you is do not let emotions run the game. Stick to whatever your trading plan is. If you're just like arbitrarily feeling good or bad, that doesn't matter. This is the market. It's a game of numbers. It's a game of crowd sociology, crowd psychology. This is not a game of just being fearful or greedy. Whatever it is, stick to your plan. All of us listening right now have different plans. Whatever yours is, I beg of you to stick to it. Do not let greed and or fear somehow change your trading plan. That doesn't matter if it's an AMC, GME, any equity, any option, any future, any crypto. Whatever your plan is, I beg of you, stick to your plan. What you need to know is that I will not be streaming tomorrow. I've been saying this ever since the weekend. I have to do an interview tomorrow. So no matter what goes on tomorrow, I will not be streaming. I will be back on Friday. I have to go up to New York, film it. I'll come back, and then I'll be streaming the normal schedule on Friday. If possible, I'll do my best to get up some content, but I don't know if it will be possible. It sounds like one of these things that will be like kind of an all-day film session. I'll try to keep people updated of my thoughts and what's going on Twitter, if you're looking for that. But unfortunately, I will be incapable of streaming tomorrow. So I appreciate all the wishes of safe travel. Shout out. I appreciate all the support. You guys are fantastic. Like I said, we are in the trenches together. Seriously, I just want to reiterate, your support is absolutely phenomenal. I appreciate all the likes, the new members, the subs, the super chats, all of that. Shout out to everyone on Twitter. Shout out to everyone on Rumble. Shout out. We are in this together. We are the Moon Gang. I will catch you later. And as always, from me and Cher, best of luck in the markets.